Let's bring in the General, Ben Swinburne, Morgan Stanley's managing director and head of U.S. media research. Ben, it's good to have you. And I mean, certainly these companies are telling us demand is strong. It's just that the stocks aren't rewarding investors for it.
That's right, Kelly, and thanks for having me. And we're down here at Alumni Weekend. Wish you were here.
Wow, nice.
Yeah, there are pockets of media that are really strong. I know you couldn't tell that from stock performance, but the return to live entertainment, particularly live sports, is an area where the consumer just is really spending and attending, aggressively and extensively. So we expect to see good results out of some of the names you mentioned, including Endeavor next week, a stock that's down a lot, owns the UFC, as well as the William Morris Talent Agency, and also Walt Disney next week, who reports earnings. We expect strong theme parks results. So there are certainly pockets of softness, but I would say the consumer on the entertainment side continues to put up very strong numbers.
Does it matter if demand is strong, if wage pressures are as bad as they are, if, pricing pressure isn't, or I should say pricing power isn't maintained?
Yeah, certainly we are seeing inflation hit the cost side of a lot of these businesses, but so far that's been able to be passed through to the consumer and then some. We saw that with movie ticket prices and Cinemark's results this morning. We're seeing that in live concerts, live sports, and we expect to see really strong per capita spending growth from the theme parks at Disney next week. So yes, inflation is an issue, but when you compare it to other parts of the market, we're talking relatively small amounts of margin pressure relative to very strong top line. So I still think this is a good place to be within TMT. Yeah,
and Disney, you mentioned, is a favorite of yours. A couple of names that jump out to me. We don't hear a lot about them, but Spotify, of course, the CEO trying to buy stock, soothe investors there. You think that's a buy here? I would love to know why. And the New York Times.
Yeah. So not all streaming or digital subscription businesses are in the same place competitively and from a growth point of view. So in music, we think there's a really long runway left for streaming music. We're over 50% penetrated in North America, but just over 10% globally. And prices for streaming music have really not gone up at all in the last 15 years, which obviously, if you compare that to streaming video, a much different story. So we see a very long runway there. That's part of why we like Spotify, along with their podcasting investments. Stock's about one-time sales here. They have an investor day coming up, so some real catalysts. So we feel good about that one in particular. And, we continue to see on the news front, New York Times is really owns the category. And among all streaming services, this is the one we think can actually accelerate net adds this year relative to last year, which is very different than what we're seeing, particularly, again, in streaming video where growth is slowing. Wow.